Welcome to Real Talk with Real Estate Pros, where we bring you exclusive interviews with the real estate experts. We'll delve deep into their journey to success and learn how to go the extra mile to serve their clients' wants and needs. Let's dive in. Here's your host, John Money McKinley.
Good morning, everyone. Welcome to another edition of Real Talk with Real Estate Pros. Thank you all for being here today. I appreciate you. And we've got a great show for you. It is the final Wednesday of the month. And I always like to bring up some news topics about what's happening in the world of real estate and credit. But before we dig into this and I bring on today's guest, I would like to thank everybody for subscribing and subbing and sharing this with your friends and family. And would also like you to please continue to like and share and subscribe. We really want to grow this channel to be able to provide a place where you can really get the information you need to make an informed decision when it comes to buying, selling, refinancing, real estate, as well as what's going on in the world of credit. Because in what I've learned in my over 25 years of working in the mortgage business, things are always changing, whether it's the real estate side of things, the mortgage side of things, or the credit side of things. With that said, I'd like to bring on today's guest, Mr. Greg West with West Credit Services. He is our credit expert, and as always, he's here every month to share with us what's going on in the world of credit. Mr. West, how are you on this fine morning?
Great. Glad to be back.
Well, I appreciate you being here, sir. Tell us, please. I know you're out in the secret hidden mountains of Kentucky. How are things going there, sir? Anything we should be on the lookout for?
No, that seems to be okay.
Perfect. Well, I appreciate you being here. And I know you and I have been really talking over the past 30 days here on some interesting things happening in the world of credit and real estate. And I am glad that you're able to be here and share some things, because for anybody that's looking to start making some credit moves, whether it's real estate or other type of financing, we are most likely going to see some changes on what's happening with the way they're evaluating things and scoring things.
Oh, yeah, we have some good articles on that today.
Yes, we do. Well, let's start off because, as most of my viewers know, I am located here in Houston, Texas, aka the Woodlands. That would be North Houston if you're not from the Houston area. And let's take a look and see what some of the experts think about Texas real estate market will look like in 2025. A recent report from Realtor.com projects that the Lone Star State is poised to become the most populous state in the U.S. by 2045. We'll be taking the top honors from California.
Not surprised.
That should be interesting. We do have a lot going on here, though. There seems to be a lot of businesses and companies that have been moving from California to Texas, because in Texas, we tend to be a little more favorable towards businesses, and businesses growing because we know they provide people with a lot of jobs.
Yep. Lower taxes.
And lower taxes too, unless you're wanting to buy a home. But we could talk about a little bit of that. I know our governor has been talking about wanting to do some things in the legislate with really getting some complete tax reform, which should start giving us some relief. And I'm sure if any of you out there in my audience own a home or looking at buying a home, you've most likely been getting a surprise when you take a look at what your property taxes are going to be on that home. How are the taxes where you're at, Greg?
Pretty good, actually. Well, comparatively speaking. I think ours was valued at I want to say 240,000 or so. The tax is like 1,400 for the year. So what is that? 0.5% or something?
Oh, that's not bad at all.
Yeah, it's real good.
Now in
For
Kentucky,
now.
for now. Now in Kentucky, do you have a state income tax?
Yes.
Okay. And that's one thing that we are blessed with here in Texas. We do not have a state income tax.
I got to make it up somewhere else.
Exactly. Exactly. Now, here's something else that's going on, and there is proponents on both sides of this. This is what is affectionately called the CFPB, that all of us in the world of lending, we just love those folks, and they've been such a joy to have to work with over all of these years. Stands for Central Financial Protection Bureau. And they were created after the last great mortgage meltdown. And they were put in place as a way they were supposed to be a protector for the consumer and stop banks and mortgage companies and credit card companies from really taking advantage of the consumer. Have they done some good? Yes. Have they done some things that are not so good? Yes. Have they done some things where it appears, I don't want to say specifically have done this for any particular political reasons, but some of us in the industry feel they have gone after certain companies that they do not like to make an example of. Let's listen here really quickly. This is just going to kind of give an understanding of what's happening, because at this point right now, the CFPB is, for all intents and purposes, no longer in business. And are you hearing the audio on your end, Mr. West? Well, it looks like, yeah, it looks like the audio on my end is not working. You weren't hearing that either, Greg?
No, I could hear it.
Oh, you could hear it. Oh, okay. I couldn't hear it. Okay. Well, I'll let it keep playing. Now, one of the things that a lot of us find very interesting is there was a large pending lawsuit that was getting ready to go against the nice folks at Rocket Mortgage. And a lot of what was happening with that is the CFPB was talking about the fact of they also have a real estate division side on their part. And there was a lot of talk about things that were being done. I have to be very careful what I say here because I don't want to be accused of putting out there anything that is not correct. So that's why I'm being very careful on what I'm trying to say here. But basically, when the CFPB was going after Rocket Mortgage, it was really hampering them. And now that lawsuit has been just shut down completely, it's left them in a much stronger position. And I suspect we're going to see a lot of push. This is just my belief and my speculation. I can't say factually this is what they're going to do, but you're going to see a heavy marketing blitz from Rocket Mortgage, as well as a big push for them on the real estate side of things.
Well, I could see that from a credit perspective as well. They had a big lawsuit against Experian for not properly honoring credit disputes, which I assume that's going to be dropped. But also technically they haven't been honoring disputes since 2021. It's been they do here and there. TransUnion did the same thing. Even Equifax was ignoring. So all three of them were guilty. For some reason, they only went after Experian, but only took them 3-4 years. So I don't know. I have mixed feelings about it being shut down. I don't know,
Yeah,
but yeah,
we do need some governing on the credit side of things. I mean, we do, because when you take away the sheriff, the police officers, tends to leave people going, hey, there's nobody enforcing these laws. What do we care? With that said, and that's one thing I can confidently say, I'm very happy with the company I work for, because the owner did mention that, hey, everyone, I want to make sure everybody understands, just because the police aren't out on the streets anymore in our industry, the laws are still in place. The laws that the CFPB was in charge of are still there. And with that said, just because the administration is, for the most part, it's been neutered, it's shut down right now, what's to stop a future administration from coming in? And I have a strong sneaking suspicion the next administration that comes in and starts, not the next one that is coming in is going to reactivate them, but an administration that comes in and reactivates them, I think we're going to see some strong enforcement action taking place.
yeah, against those that thought they could get away with it. Yeah,
Exactly. And this is why it is so important that you make the correct choice when you're working with a lender. You need to know who you're dealing with and make sure that you've done some due diligence on them. Find out what you need to know about them as the lender. Find out what you need to know about the loan officer you're working with. That's very, very important. And at the end of the day, I would hope you would take a look at me, John Money McKinley, who's been in the mortgage business since 1999. And I've always handled my business on, I want to make sure that I'm comfortable offering what I'm offering to my clients is the same that I offer to my own family. Because in this world of buying and selling real estate and getting financing on it, this is one of the biggest financial moves people make. And I like to lay my head down at night and feel good and know that I was able to help people be able to get the correct financing in place so they too can have a piece of the American dream of home ownership.
yep.
Well, let's move in here and let's take a look and see what is going on in the Houston housing market. According to this article here, it's stating that looks like the market is starting to be a little more favorable towards buyers. And the Houston housing market has been a roller coaster over the past few years. Rising mortgage rates, inventory fluctuations, and a shifting buyer sentiment have made it to a challenging environment for both buyers and sellers. But as we move deeper into 2025, the latest data from February suggests a turning point, one that may finally work in the favor of buyers. With home prices declining for the first time in over a year, mortgage rates improving, and inventory levels expanding, buyers now have more leverage than they've had in a long time. But what does this shift mean for sellers, and how should investors navigate these changes? Let's break it down. And then it talks about what the numbers were for the sales in February 2024, a little over 7,500. February of 2025, a little over 7,200, a decline of 4.7. But here's something that we should look at. These are two numbers here that are going to tell us a big picture. The total volume was 2.8 in February of 2024. It really didn't drop all that much in the dollar amount. really only about 0.06%. Here's where we're seeing a big change. The total active listings in 2024 were a little over 39,000. Well, now in 2025, we're looking at 49,000, almost 50,000. So that is a big plus if you are out in the market looking to be able to purchase a home.
Yeah. More inventory at the lower prices.
Exactly.
Yeah.
I'm finding from what I've been experiencing with my clients and the real estate professionals that I work with, the real estate agents and real estate brokers, sellers are really beginning to offer more help with the buyer's closing cost. Here in Texas, and if you've never bought a home here in Texas, it's traditionally customary for the seller to pay for what's called the owner title policy, and that is title insurance on your home. A lot of my investors that they grumble because every time they have a real estate transaction, they have to purchase a new policy. However, that's a very important policy because what that does is that ensures your title is protected from the time that you bought it, the date and time that you bought it, all the way to the beginning of time. So if something should come up in the past, you have a title insurance in place. And I say all that to say is typically the sellers would pay for it. And when we were in the heightened market with everything going crazy over the past 4 years, sellers were making the buyers pay for it. And that can become pretty costly when it comes to your closing cost, which is a big help.
When you say stuff coming in the past, you talk about maybe liens that they missed during a closing or something?
Correct. Like
Okay.
when they deliver you the title at the title company, here in Texas, we use title companies. Your state may be different. You may use attorney offices as well. Of course, the title companies in Texas, guess who they're run by? I know this may sound a surprise, Greg, but they're run by attorneys.
Mm.
But with that said, is they ensure that at the time of delivery, when you purchased your home and got that title policy, they delivered you a clear title with the only encumbrances being the HOA, if there is an HOA, and the new lien that you're putting on the property.
Got it.
I have a borrower who's a real estate investor that I've worked with for, 20 years now. Great guy. Him and his wife are just wonderful people, and they have built an incredible real estate portfolio, something that they're going to be able to hand down to their children when they leave this earth. There turned out to be some fraudulent stuff that was happening from the seller that he bought the property from. He bought it, renovated it, brought it up to standards, has a tenant living in there. Just recently, he got notice from an attorney's office going, hey, you owe my client almost $40,000 for unpaid liens, mechanics liens. He contacted the title company, and guess what the title company said? We're going to work. We'll get this taken care of for you, sir.
Insurance doing its thing.
I told him, I said, as long as I have been in this business, and I know title insurance has been there before to help people out. I'm not saying that it hasn't. This is the first time that I've experienced it with a client of mine, and it was very nice to see. He had absolutely no trouble with the title company when they found out what was going on. They took the letter that he sent them from the attorney's office, and they immediately jumped on it. So that's another plus there too. And we both laughed about it. I'm like, heck, with all the title policies you've bought over all these years, sir, it's nice to be able to actually have to use it. He goes, yeah, I felt a whole lot better knowing that that's there taken care of. I really don't have to worry about it now.
Yeah.
Well, I know there's also been a lot of talk about the Fed and the short term interest rates. And people have been wondering, when are the mortgage interest rates going to come down? The Fed has really been saying that they're not really all that excited about lowering the short term interest rates. And what to know? The Federal Reserve held the line on Wednesday on its benchmark interest rates. That was last Wednesday. A move that indicates the central bank is opting for a cautious approach as concerns grow around the impact of President Trump's tariff policies. Talking to reporters, the Fed chairman, Jerome Powell, said it's going to be difficult to have a precise assessment of how much inflation is coming from tariffs. The Federal Open Market Committee, which set the rates, kept its key borrowing rate target in a range between 4.25% and 4.5%, where it has been since December. However, the Fed did suggest that some cuts will follow later in the year. And a lot of this is going to wholly depend on what happens with inflation. If we start seeing inflation rise rapidly again, they're not going to cut the rates.
No. Yeah, dude. It, I just don't. These rates, man. It's like I, I'm almost at the point now. I think that it's a controlled demolition. These guys are purposely just not doing what they're supposed to be doing. Uh, at some point, there's going to be a precipice, and they're either going to have to do it, or the whole thing's going to lock up. There's not going to be any liquidity available to do loans or whatever. I mean, you could talk about it for hours. I mean, there's a lot of complex issues to it, but it's more than just the Fed lowering stuff. It has to do with the 10-year bonds, and yeah, that's all I got to say.
Yeah, a lot of people too were really excited when the Fed lowered the rates last year. Well, guess what happened to my mortgage market? The exact opposite happened.
Yeah.
The exact opposite. And here's another thing to keep in mind. When the economy is doing good and everything is moving along and businesses are doing very well, you're not going to see any reason for the long-term interest rates, such as mortgages, to come down.
Yeah.
So what is it going to take for that to happen? Going to need to be looking at some trouble in the economy. There's just really no other way to say it is. If you want lower interest rates, hope for job layoffs, hope for a bad economy. That's typically what happens.
It depends on who you're talking to. I mean, if you got a guy who's got a ton of money and risk on equities, stock markets and whatever, you've got people selling out of the bonds to put money into that. That's what makes the interest rates go up. So you can't have one or the other. And I think Trump's a big, I probably shouldn't have mentioned that. He's a big stock market dude. So he gets a lot of pressure when it starts dumping, which it has about 10% since the new year. So they're doing things to get it to go back up, because people associate, for some whatever reason, the stock market going up with a good economy, and it's not how it operates. But yeah.
Well, and that's the thing, is if he's going to keep, which he's going to promote business, that's fine. We want businesses to do well, but the money's going to come out of the bond market, and there has to be another source that's going to put money into the bond market, which we saw that during the pandemic. I'm sorry, I apologize. That there were a lot of mystery buyers coming in and buying in the bond market. Well, that kept our rates down and pulled the rates down, which is why we had those incredible low interest rates.
Something that is a positive. They, in the last meeting, they did say they were going to stop tapering off their balance sheet, the Federal Reserve, which is kind of a way of doing quantitative easing. What they're doing is they're not selling off a lot of their stuff that they were doing. So there's kind of some good news out of that too. So I don't know. They're kind of playing both sides.
That is a plus. Well, let's move into your credit part here, sir, which ties
All
in
right.
with the mortgage part, talking about credit score models and reports and what's happening with some changes we may be seeing coming here in the very near future. This article here is from Fannie Mae. And if anybody would like to know who Fannie Mae is, they are one of the big GSEs that purchase the mortgages that you get when you buy a home. Now, FHA and GSEs, Fannie and Freddie, have updated the enterprise credit score models and reports initiative to revise the implementation date from the fourth quarter of 2025 to a be determined date for incorporating the new credit score model requirements into mortgage processes and implementing optional bi-merged credit reports. This update is being made in response to industry feedback and better support market participants with this transition. Which, what this means is the way your credit scores work today, we're most likely not going to see them working, at least when it comes to getting a mortgage, in 2026. And a lot of that is going to we were talking about this earlier, Greg, going to what modeling?
Trended.
Mhm.
Trended scoring. Yeah, which we got a theory on that we'll get to at the end of this. But yeah, we had talked about that on some podcast we did, I think last year or something, that they were going to start implementing a Vantage score along with part of the FICO and blend them instead of, like, usually when you get your mortgage, they do the tri-merge, they get TransUnion, Experian, and Equifax, and they pull the one out of the middle. Well,
Right.
now, from what I'm reading correctly, they're doing two of those and then adding the Vantage score as another option when they give the mortgages. And for those not aware, that's like what Credit Karma and stuff gives you, the Vantage Score 3.0, which typically I despise them because you don't, Vantage Score is not used by anybody hardly. It's mainly FICO, but this, of course, changes things once they start implementing that.
Well, another thing too is the trending is where you've seen it, and you and I have both recommended to people. Let's say somebody comes to me and they have I'm just picking numbers here, a 680 credit score. And I look at the credit report and go, well, wait a minute. If they pay down this account, this account, and this account to this balance here, we can have their score go from a 680 to a 720, which means for them a much better offering that I can offer them on the interest rate.
Mm-hmm.
With the trending model, that's not going to really have an effect on their score because the trending is looking back. What have you done, not for me lately? What have you done for me over the past year or two?
I read 24 months, and me and you, we weren't even going to talk about this part, but we discussed it before we even did this podcast. I had an actual example. That's one reason these things are good to watch, because me and John are in the trenches, so we see things progressing in real time. And I actually had a client that just paid off a crap ton of debt. It was like $40,000 for the credit cards, and we were using the free FICO scoring and some of the free scores they got on their credit cards to see where their FICO score 8s were at, and they went from the low 6s to high 700s, mid 700s or so. It's like, okay, well, this is a good time, so you need to go ahead and do this, this, and this. Well, they were denied, which I was extremely surprised about that because their scores were definitely high enough. But when we got the denial letter in the mail, they showed their score as a 561. So that led me to believe what we're talking about right now is that instead of just taking the picture of what their score looked like today, they went back 2 years worth and saw all this accumulating of debt of credit cards getting near 100% utilization. And then just now in the last month, it's back down to less than 10%. I think it threw up some sort of flag, or maybe the way they do it. So these trending models are going to make a huge difference to people in the future. You're going to have to do things differently and prepare way more in advance for mortgages especially.
Yes, and that's why I'm encouraging folks that are saying, I'm not ready to buy now. I've got some things I want to work on this year. I want to get myself in the right position. I think the markets are going to do this in the following year. And I tell them that's great, but I would strongly recommend that if it has to do with credit, you're going to want to get that done sooner than later, because you don't want to be getting into 2026, first quarter, second quarter of 2026, and finding out, hey, it's kind of switched over and it's leaning more heavily on the trending model, and be stuck being offered a much higher interest rate. It's definitely keep in mind.
And we'll see in the next slides there, but also these FICO, they're using like the FICO 10T, which stands for trending. And unfortunately, us plebes, we don't have access to buy that information. You can't really find out what your true trending score is until you actually apply for the mortgage. Unfortunately, you can just get a roundabouts of where you're at. Which that's kind of talks about the FICO 10 and the 10T and what the differences are, which is, it says there, if you read under that first area, that's where I got the 24 months from of credit activity.
Okay. Here's what
So
to know
that's the
about
difference with the 10 and the 10T of what they're doing.
Yeah. There's
And of course, put those in the links in the description of the video for people. But
yes, definitely. Well, there are a lot of changes coming. And like I said, when we first started the show, I've been in real estate for over 25 years. You've been in credit for over 25 years, correct, Greg?
oh yeah, yeah,
It's always changing, isn't it?
all the time. I'm constantly learning.
And I'm going to go back to where we were. That's why it's so important. You want to have the right people in your corner. You want to have the people, whether it's your real estate agent, your mortgage person, your title company, or closing attorney, your home inspector, and your homeowner's insurance agent. You want to have the people that are up to date on what's happening. I can sit here and brag, I've been in this business for over 25 years. Well, if I'm not constantly learning and constantly staying up to date on what's happening, I might as well have been in the business 6 months. It doesn't matter. You've got to be up to date. And that's why it's so great that I'm able to have you on here every month with us, Greg, and you share a lot of great information about what's happening in the world of credit. Would you do me a favor, and as we come to the end of the show here, please let my audience know the best way to really be able to get a hold of you to find out if they want to get a better idea of where they're at with their credit.
Oh yeah, 2 quick ways. You can call directly 859-625-4546, or go to westcreditservices.com, and you can schedule. It goes right to the contact page. It'll schedule an appointment from there.
Perfect. Well,
and of course, free
consultation. Nice. Well, Greg, I'm going to put you back in the green room if you don't mind, and I'm going to say goodbye to our audience.
All right.
All right. Thank everyone for being here today. Please do me a favor, like, subscribe, and share. And if you know anyone who you think would be a great guest on the show, reach out to me. Let me know. All my contact information is everywhere on this page, everywhere on this channel. We're really trying to have more guests on the show that can really dive deep in what's happening in the world of real estate. Y'all have a great week, and we will see you next week.